Right now, the ticker for Taiwan Semiconductor Manufacturing Company, listed as TSM on the New York Stock Exchange, is trading at 348.34 USD. This represents a substantial intraday move of plus 21.20, which is an increase of 6.48% from the previous close. If you are watching this move in real time, you are witnessing the market digest a set of fourth quarter results that, quite frankly, redefined what we thought was possible for a company of this scale. While most investors are busy looking at the standard performance metrics, the real story here is that TSMC has effectively become the central bank of the physical world. Every single high-end computation that happens on this planet, whether it's a trade on a Fidelity mobile app or a complex simulation for a new pharmaceutical drug, likely passes through a piece of silicon born in a Henshu clean room. The expectation for a long time has been that TSMC is merely a high-quality supplier to the giants, a middleman that takes a cut of the hardware business. The reality, as revealed in today's numbers, is that TSMC is the one setting the pace for the entire global economy. They are no longer just a chip maker, they are the gatekeeper of global compute. The common belief about TSM stock is that it lives and dies by the performance of Nvidia stock or the latest iPhone cycle from Apple stock. People look at it as a secondary play, something you buy when the direct players are too expensive. I want to challenge that perspective. If you look at the 62.3% gross margin they just reported, you realize they are the ones with the ultimate pricing power. They aren't just reacting to demand. They are the bottleneck that determines how fast the rest of the world can grow. When you consider the sheer scale of the $52 billion to $56 billion capital expenditure they've guided for this year, it becomes clear that they are building a moat so wide that the competition isn't even in the same zip code anymore. While Intel struggles with its transition and Samsung tries to fix its yields, TSMC is already looking toward 2-nanometer production as a standard. This is the difference between a company that follows a trend and a company that builds the infrastructure for everyone else to exist. Looking at the immediate daily swings, the 6.48% jump today is backed by massive trading volume, which suggests that institutional players are aggressively reweighting their portfolios. We are seeing a shift from speculative tech into the foundational hardware that makes it all possible. This isn't just retail enthusiasm on a Robinhood app. This is big capital from places like Fidelity Investments and Interactive Brokers moving in to secure a piece of the only foundry that can deliver at the 3-nanometer node with high yields. The earnings report was a total blowout. Revenue hit $33.73 billion for the quarter, which is a 25.5% increase year over year. But it's the net profit margin of 48.3% that should make every investor stop and take notice. Almost half of every dollar that comes through their door is pure profit. That is an efficiency level that you usually only see in software companies, yet TSMC is doing it while running the most complex physical factories in human history. Institutional activity has been concentrated in the advanced nodes. 77% of their revenue now comes from 7-nanometer or smaller technologies. This is where the tension lies. The market expects that at some point the AI boom has to cool off and demand for Nvidia stock will stabilize. However, the reality on the ground is that TSMC is seeing relentless orders not just for GPUs but for custom silicon from every major hyperscaler. Companies are no longer willing to wait for off-the-shelf parts. They want their own chips, and they all have to go to TSMC to get them. This creates a backlog that provides incredible visibility into future earnings. When you use Interactive Brokers or any advanced trading platform to look at the order books, you can see that the market is beginning to price in a higher-for-longer growth trajectory for the semiconductor sector as a whole. What does this company actually do at its core? For those who might be newer to self-investing or using online investing sites for the first time, TSMC is a pure-play foundry. They don't design their own chips to sell to consumers. Instead, they provide the manufacturing services for the companies that do. This business model is brilliant because it removes the risk of a single product failing. If one company's smartphone doesn't sell well, TSMC is likely already making the chips for the competitors whose phone is flying off the shelves. They are the silent partner to the entire tech industry. This specialized focus has allowed them to master the physics of extreme ultraviolet lithography, a process so difficult that it has essentially ended the era of fast followers in the chip space. You can't just throw capital at this problem and catch up. You need decades of institutional knowledge and a very specific relationship with equipment suppliers like ASML. Recent sector momentum has been heavily skewed by the push for domestic manufacturing in the United States. The Arizona expansion is a huge talking point for anyone managing a Fidelity brokerage account or looking for investment help regarding geopolitical risks. The reality is that building these plants is incredibly expensive and difficult, but the long-term strategic value is what's driving the stock's premium. Management has confirmed that they are accelerating these builds to meet the demand for localized supply chains. This is a direct response to the expectation of geopolitical instability in the Taiwan Strait. By diversifying their geographic footprint, they are de-risking the stock for long-term holders who might be worried about a single point of failure. It is this kind of forward thinking that separates a standard investment from a core holding in an intelligent portfolio or a Schwab Intelligent Portfolios. At this point, I want to hear from you because the sentiment around this stock is shifting so rapidly. Comment below how many shares of TSM you currently hold, or if you prefer to play the sector through something like a semiconductor ETF. Do you think the high capital expenditure for the Arizona plants will hurt their margins in the short term, or is the price of security worth it? I'm curious to see if you are buyers at these all-time highs or if you're waiting for a pullback. The future outlook for TSMC is tied to the concept of sovereign AI. Governments around the world are realizing that computing power is a form of national strength. This means we are moving into a phase where the demand isn't just coming from consumer electronics or cloud providers, but from nations themselves. This represents a massive expansion of the addressable market that isn't fully reflected in the current valuation. While the PE ratio is around 28 to 35 depending on which interactive brokers metrics you use, that might actually be cheap if the growth rate stays in the 30% range for the next 3 years. The risk, of course, is a broader macroeconomic slowdown that hits the automotive or smartphone sectors. But even there, the content of chips per device is increasing so fast that it often offsets a decline in unit sales. Even in a slower economy, the cars we buy and the devices we use require more sophisticated silicon than they did 2 years ago. If we look at the potential catalysts for the rest of 2026, the transition to 2-nanometer production is the biggest one. This will be the next major step in performance and power efficiency. If TSMC can hit their yield targets early, it will essentially lock in their dominance for the rest of the decade. Conversely, the risk is that the sheer cost of these new nodes starts to price out smaller customers, leaving TSMC dependent only on the largest tech giants. This would create a concentration risk that could make the stock more volatile. However, based on the current data, the appetite for high-performance computing is so high that even at premium prices, the capacity is likely to stay fully booked. This is the reality that is currently overwhelming the more cautious expectations of the bears. To summarize the situation, TSM is currently trading at $348.34 USD, up 6.48% because it has proved that its business model is resilient to almost any external pressure, except for literal physical conflict. They are beating on revenue, smashing margin expectations, and guiding for a massive increase in investment that signals their confidence in the future. The expectation was that the AI surge might be a flash in the pan. The reality is that it is a fundamental restructuring of how wealth is created in the digital age, and TSMC is the primary beneficiary. Whether you are using a Fidelity trading platform, a Robinhood app, or an individual brokerage to manage your assets, TSM has become a stock that is almost impossible to ignore. They have successfully transitioned from being a supplier to being a necessary component of global stability. As we look toward the close of the trading session and into the coming weeks, the focus will remain on how the rest of the semiconductor sector reacts to this news. Usually, when the king of the industry speaks, everyone else has to listen. We are seeing a rising tide that is lifting the boats of equipment makers and chip designers alike. The authority TSMC commands in the market today is a result of years of disciplined execution and a refusal to participate in the boom and bust cycles that once defined the industry. They have built a stable, predictable, and incredibly profitable engine that powers the world. The gap between what people expected from this earnings report